My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
All right, guys, welcome to Property Profits Podcast. I'm your host, Bryce Kaminsky, filling in for Dave Dubois. And have you ever wondered how to turn a small investment into big real estate success? Well, today my guest, Paul Rink from Real Estate Solutions PR, is here to unravel his secrets from house hacking to lucrative seller carryback deals. Paul, welcome to the show. Great to have you here.
Yeah, thanks so much for having me on.
Yeah, no problem. So how did you get started in real estate? What was the tipping point that got you into the game?
Really, it was getting let go of my job when I was trying to get into a union, and I just started Googling how to make money. And really that led me through a couple avenues that were failures and eventually led me into long-term rental properties.
Let me guess, drop shipping.
Not drop shipping,
Crypto.
stocks.
Stocks. Hey,
Yeah.
man, I know a guy who makes lots of money doing that. It's just not for me, it's just
Me
not.
neither.
So can you share your experience with the house hacking side and how that impacted your real estate portfolio?
Yeah, so actually my very first house, I was house hacking, not even knowing what house hacking was. I just had a couple people move in, just to, make a little extra money while I was living there. Did it completely wrong, had no leases in place, had to post an eviction notice on a door in my own house. That was very awkward.
Yeah.
After getting my two roommates out, I lived on my own for a couple of years and started to learn how to do it properly. And that's when I kind of ran into some issues with my job, and it led me to rental real estate. And I realized I dealt with a lot of the bad things up front. I just have to learn how to do it right in the future. So that helped me want to do it again, and then use that as an investment strategy to actually do two more house hacks, one being the house I'm living in now.
Nice. So when you say I ran into all the problems and now I know what to watch for, what were some of the challenges that you experienced early on? The eviction in your own house, that had to be awkward, but what else?
Letting somebody move a dog in when I don't have pets. I allow pets in my rentals for an extra fee, of course. But I don't want pets in my house, so I let somebody move their dog in. Of course, no leases. And not really I was more just anybody that wanted to live with me I was okay with, and it was like referrals from friends or my friends that aren't friends anymore. So I would say whoever I had move in, I learned to vet them how I would vet anybody else. And my best roommates have been people that I didn't even know before having them move in.
Yeah,
So,
that's usually better, separate a church and state, we could be best friends. You probably not a great roommate because when things get a little bit tricky, but man, we've been friends for 10 years.
yeah.
Well, shouldn't have moved your dog in or whatever it was. So is that what kind of got you moving towards these like creative strategies for your rental acquisitions? Just being that you got let go and you're like, okay, I need to buy property, but my W-2 paperwork, it's not so hot right now.
Yeah, so I did pick up another W-2 quickly, but I realized that I never wanted to rely on a W-2 again. But I did use like a HELOC for my first house to buy my first two investment properties, long-term rentals. I bought two houses on one lot, which I don't even own anymore. But as I wanted to start scaling, I realized it's not too efficient to be using all my own capital. So I started to learn some of these creative strategies in order to get a lot less money out of my pocket into deals.
Yeah, take control of them instead of owning them outright in some way. So tell us a little bit more about what motivated you to pursue these seller carryback deals. Could you walk us through your most successful, significant success in that area?
Yeah, so I've only done one so far, but I also transactional coordinate some of these deals as well for people now. But what I went to pursue this deal, I was actually looking at properties in Charlotte, North Carolina, and Charlotte's an extremely hot market. So I was having to look for very creative ways to get into that market with a little bit of money.
Right.
So this property specifically, I actually bought off the market or off the MLS, but there was a little thing in the description that said owner will seller finance.
Mm-hmm.
So after talking to him, I was actually able to help him understand that going into second position would actually get him more money in his pocket now, and he has a lot of control as well still. Even though he's in second position, there's a lot of tax benefits in order to do so. I have full length videos on my YouTube channel about this, so I won't go into it in full detail. But essentially, I bought a $450,000 property after putting about a $40,000 rehab in, all closing costs, all holding costs, fully rented out. I was 14 grand out of my pocket. So
Wow. There you go. So that's like, I don't know what percentage it is, but it's not 20%.
no, it's not even close. It's not even
Yeah.
5%. So
There you go.
yeah.
So this the strategy is specific to these hotter markets, or can this be done anywhere in the country?
Oh, it could be done anywhere in the country. You're looking usually for a seller that's owned the property for a while, whether it's on or off market. If it's on market, you're looking for something that's usually sitting longer,
Hmm.
or looking for motivation, like multiple price drops in a row.
Hmm.
Um, and you're able to come in with a higher offer to the seller if they're willing to give you some terms that benefit you.
Right.
So the biggest thing is understanding the strategy so that you can convey that to the seller. But it works in any market. You're just looking for a specific type of seller.
Hmm. Yeah, it has a lot to do. I found that um, that motivation is a key indicator as to whether or not they're willing to take creative deals because they're just like, I don't want it. I'm discounting it. People don't want it. But maybe if the terms are better, then the price doesn't have to be so much. Like it's either price or terms. So you're coming with terms and saying, hey, I can solve this creatively. You mentioned also that you've got the private money lending business, and there's been some challenging challenges you faced trying to scale that. Can you dive a little bit more into the whole private money lending side of things?
Yeah, so I'm scaling my investment portfolio on the property side as well as me and my partner scaling up a private lending business. We both I lent a lot of my own funds last year.
Mm.
Just 6 deals, completely successful. One was late, but it came back. But over the course of the 2023, I had 6 private money lending deals, anywhere between 60-day and 90-day deals, usually around a 15% flat rate. So
Mm.
I was doing pretty good, and every deal I was learning better ways to underwrite um, the the prospective deals coming in, requests for funds. It got to the point where I was getting more good properties or good deals to lend on than I had capital. So I started partnering with people and bringing joint venture agreements into the mix to get a little bit more capital into some of these deals. The
Hmm.
challenge I've had now is a lot of people that want to come in with their funds are asking way too much, in my opinion, for their capital. And it's putting some of these deals at risk. So it doesn't make it a good deal anymore when they're asking X amount for their capital and X amount for late fees. Um, it makes the deal really skinny. So my biggest disconnect right now is honestly trying to find more traditional private money lenders or private money partners to come in on these deals with more reasonable or realistic expectations for their capital.
So how are you navigating that whole disconnect between these private capital providers, their expectations, and really the borrower's affordability? Because like things are changing in the marketplace, and is it that the lenders are too greedy or the borrowers are too cheap, or what is it that you're seeing and how are you navigating that?
It's a little bit more of, I think the lenders, it's not that they're too greedy, it's that they're too greedy when it comes to good deals. They're not seeing the difference between a safer place to put their funds rather than
Mhm.
a little bit more risky deal where, yeah, maybe you're going to get 15 to 20% flat rate on this 60-day term, but there's a lot of risk in this deal letting your funds out. Or maybe you're, doing a 6-month flip project that has a lot of equity, and they're not offering as much of a return, but your money's a lot safer in that deal. And also, obviously, location of the deal also plays a role into this.
Mhm.
Um, so the biggest thing is me trying to convey to the lender or partner, mainly just expressing the expectations of them and why they need that much. But I also don't want to force them into putting their money into a deal that they're not comfortable. So
Hmm.
I just at this point have let those lenders say, we can't pay that rate for this deal if we're bringing in your funds. I'll send you what I have in the future. So I've been actually doing a lot more, honestly, cold calling and outreach. I've been pulling lists from like my county
Hmm.
and looking for people in second position or what it looks like they've lent funds in second position. And I've just started skip tracing those and cold calling to find more private lenders or private money partners.
Yeah, I noticed you're in second position. Is that a loan? Would you like
Yeah, a
would
lot
you
of a lot of
report
times
loan?
it's
What?
it's a promissory note secured by a deed of trust. Um,
You're finding that like breadcrumb trail and you're following it to see what you could find on the other side. Cool.
yeah, so it's a lot of legwork really digging into it, but it's starting to show some success. I mean, I already know that those people have put money out there, lent, whether it's to family, friends, or companies. So they've obviously put funds out, and you can kind of tell the difference between a bank lend loan or possibly a private money lending loan on the county records.
Yeah. So a lot of the time, like I've noticed you've been talking about like what I guess people call gap funding. We're talking
Yeah,
about like 3 month terms, 30, 60-day terms, 2 months terms with flat rates. Um, those are inherently more risky.
yeah,
Um, do you think maybe it's just the borrower's expectations? Like it's like you look at it and you say, look, if we're if we're in a situation that you're calling me for gap funding,
yeah,
how picky can they really be? How do you navigate that conversation? Because like
yeah,
you need the money, you're probably calling me like 10 or 15 days before closing, you're short. What did you expect? That's what I would say. Like,
right.
what did you expect this? This is like a credit card loan. I'm going to charge you 28%. Like it's gonna be nuts.
Yeah. I have had a lot of my lenders that want high 20s percentage wise flat rate, and they're asking for like
Yeah,
a
it's
$150
not
a day
uncommon.
late
Like
fee.
it's not
So,
uncommon for like
yeah,
30, 35% on these things because it's transactional, like going and taking money off your credit card. Like, yeah, they're going to charge you a cash advance, and so too are
yeah.
these lenders. So, do you think maybe it's just the borrower's expectations? Like maybe they thought it was going to be cheaper. Someone,
Sometimes it is. Yeah. But sometimes that's the difference between some of these deals are a lot more risky. And I don't like to bring any deals to, well, that I wouldn't lend on. So if I have funds available, I'm going to lend to the deal. If I can't, it doesn't pass my underwriting, I'm not going to bring it to anybody else.
hmm,
I wouldn't feel good about myself bringing a deal to someone that I wouldn't lend on.
hmm,
So a lot of these deals are not super risky deals in my opinion. But I also tell anybody else you have to do your own underwriting. This is not my job to underwrite your deal. I'm just presenting you with this deal.
hmm,
We have other various ways to protect myself as a connector and them as a lender as well. Uh, Definitely don't have time to go through all of that right now.
hmm,
But I think some of these lenders expect the same return, whether it's a 2 month deal or a 6 month deal, that, in my opinion, is a lot safer place to put your money with a lot less risk. And some
hmm.
of these are in first position and they still want the same returns. I'm like, you guys, if you're in first position, you're funding more essentially, or coming in with a couple other people. You can't be
Hmm.
asking for 20+%.
No, it's
It's
got to
just not going
be
to happen. And you're
two
just making the deal
points
too
and
skinny.
13%. Yeah. And
Yeah.
at some point it doesn't make sense. Like that's one thing I always say to people who are like wholesaling or presenting deals to different investors. I say, never pretend to understand how the money's done because a deal to someone with cash in hand could be a deal. And then someone who's got to get a loan on it, now all of a sudden it's not a deal because it's too skinny. But if someone's got their own cash, then okay, that deal makes sense. So when you look at the due diligence part, this is where that money makes the difference. Tell people a little bit more about how you feel like because you're doing underwriting on these things to see if they're lendable. Um, Discuss the importance of due diligence, especially in real estate investing, but also especially in these out of state properties.
Yeah. So these out of state properties, I actually obviously, well, I can't say obviously, but I like to lend in my backyard.
Mm-hmm.
There's not always deals in my backyard, but I always loan to own. So worst case, if I have to take this property back over,
I
it's
like that.
something I can deal with. And I only put funds out to where I'm comfortable. Um, Depending on the deal structure, sometimes we'll even cross collateralize with another property in order to find that safety net.
Yeah.
But the importance of due diligence on these out-of-state properties, I honestly don't even like to lend in like New York, California, Illinois, even sometimes the right deals there. But there's a couple places I just don't want to put my money into.
Is that because
Um,
like the state isn't conducive to investment, or it's just,
it's
why is that?
mostly the legislation and how hard it's going to be to get my funds back if something goes wrong.
Or like
Um,
whether it's easy to like legally, what's your legal recourse in the state of XYZ?
right. Yes. And so how easy is it to pursue like your terms to take those properties back? Will that even hold up in court? You know, some of these states are just it's not worth the headache. So if I could find if I stick to more red states to lend in and preferably states closer to me or my partner, then we have a better chance of success, in my opinion. In worst case, we have to take the property over.
Mm-hmm.
Uh, but out of state investing or out of state lending, whether it's backyard or to someone in another state, I honestly dig into the person borrowing the money more than the deal itself,
Mm-hmm.
especially when we're in second position.
Yeah.
So,
So when you look at the risks and potential on a seller carryback, how do you assess that before you're committing on to something like that?
so when I look to get myself into a seller carryback, I'm looking at this property has to cash flow as a long-term rental. Whatever creative strategy I want to do, which I've like the one that I have down in Charlotte is a room by room rental, six
Mm-hmm.
bedroom, five bath.
Mm-hmm.
So I'm getting about 25% over market rent by
Yeah.
renting it out by the room. I still have to make sure it cash flows long term. So even if I'm borrowing money in second position from the old um, seller who is now the bank in second, I have to make sure that I have a way to pay him back. I have a balloon on it, so I have to make sure I have an exit strategy in 5 years. This is just one example. But obviously, I make sure I'm cash flowing on the property so that I can protect myself getting into a deal because this deal specifically and a decent amount of seller carrybacks, you have little to no equity in the deal day one.
Mm-hmm.
Sometimes
Mm-hmm.
you're over leveraged in order to have less money out of your own pocket.
Yeah. I've seen some people do like 110% vendor finance notes where it's just like they borrowed from the seller's still carrying it so that they could do the renovations, and then they're hoping, or let's not use the word hoping, they are planning to refinance it conventionally, pay the guy off in second,
Yeah.
get a good interest rate. So is that kind of the strategy that you're looking at with these seller carries, is that you're trying to get into it creatively with like a more conventional stabilization, or do you keep that second in place 5, 10 years?
So it all depends on what you can work out with the seller. And it also really depends on market trends. Like right now, rates are who knows? I don't know if they're going up, going down. We really don't know at this point. But I had a 5 year balloon on this, and I really am not comfortable. Like if I got into another one of these, I wouldn't be comfortable with anything under a 5 year balloon. Um, like the one I have right now is a 5 year balloon at 0% interest, amortized over 30 years. So, a little money out of my pocket, but it's all going to the principal at least. So the biggest thing when getting into these seller carrybacks is having multiple exit strategies to get out of that seller carryback in second position.
Mm-hmm.
So I really don't think, even with an appreciating market like Charlotte, that I'm going to have enough equity to do a cash out refinance or even a rate and term refinance in 5 years.
Mm-hmm.
But um, knowing the seller, like you have to know the seller that's carrying this loan back because there's a good chance that after I prove to him that I stabilize this property, there's no issues with it, and I've paid him on time for 4 years, he may now, carry back some of that note at that O still on another seller carryback going forward, maybe at a percentage this time.
Mm-hmm.
That would be like my first exit. You also can do cash out or rate and term refi, or maybe even a cash in refi if you have to put a little bit of money into the deal just to
Mm-hmm.
cash him out. You could even look for a private money partner to come in with buying out the equity. And now
Mhm.
they own the deal with you and you're operating it because you've proved over so much time to actually have an operating cash flowing deal that's stabilized. So there's very many exits if you look at that before even getting into the deal.
Mhm. So, what do you envision the future of your real estate endeavors, particularly in terms of scaling this business and, tackling the industry challenges? What do you see going on? Let's say maybe rates are going up, rates are going down. How are you planning to kind of tackle these industry challenges?
Yes. So I'm focusing mainly this year on my private money lending business. So a lot of my capital is recycled in there.
Hmm.
Um, as far as growing my portfolio, anything I pick up now will be creative, and I will likely have either private money lending or private money partners coming in with some of these creative deals, like a seller carryback or a subject to, or a loan assumption if I could find something like that. Now, that's my strategy for acquisition right now. And especially with a subject to and loan assumptions, hopefully taking over a property with a lot lower interest rate than today's
Hmm.
market. So
Hmm.
you're able to pay a little bit more, maybe even get that seller that couldn't sell the property without putting money into it. Maybe they can get a little cash out of it now too. So
Hmm.
these are some of the strategies I'm looking at using going forward, but I do need private money partners or private money to do so.
So, when it comes to lending, there's transparency, which is really important,
Yeah.
especially on those short notes, because those are very risky. Like, oh, the guy disappeared. How do you maintain that transparency with your lending partners to keep them in the loop and make sure that they're, good or bad, that people know what's going on?
Yeah. So it's like I said, we do a lot of due diligence up front. Now,
Mhm.
you can never, best borrower, best person, deals can still go bad. When that money goes to work, your capital's, leaves escrow and that's actually going to work. It's out of your bank account now, whether it's my bank account or my lending partner's bank account. We
Mhm.
put together a whole entire spreadsheet of step by step what we're supposed to do at each time. And we actually text our lender, check in on this, like making sure that deed is recorded and you actually have something, a deed, you actually have a lien against this property or a mortgage against
Mhm.
this property. So we do make our lenders be involved in the transaction as well. It's not put your money out there and forget it and then blame somebody else when something goes wrong, if something goes wrong. So
Mhm.
we keep them active in the deal. We draw it out step by step of even with numbers to call for, the title company or attorney if it's an attorney state to check in to make sure that that deed or that note is recorded. But we keep them involved as we go along. We don't just have any surprises. So if something's coming up where something is falling behind, they're in the loop pretty quickly. And in our joint venture agreement and in our service agreement, we also make sure that we outline what our job is and what our part in this transaction is and what they're responsible for as well. And it seems like overkill to a lot, actually, really a lot to the borrowers and the lenders. But if something goes wrong, you want that to be in writing exactly who's responsible for what, because everything's fine when deals go through smooth. And a lot of what we do looks like overkill, but it really isn't because for that one or two times out of 10, 15, 20 deals that go wrong, you're going to be really happy that it's outlined who's responsible for what.
Mhm. Mhm. Yeah, it's the people who think it's overkill haven't lost money on a loan yet.
Yeah. Yep. Yeah.
Yeah,
I'm going through one right now where it's a couple weeks late and I'm about to file a cure notice because we might have to take a property back. So,
there you go.
yeah.
I like that. I only what was it you said I liked earlier? It was like I only lend on things I would take back or something.
Yeah.
What was
I loan to own.
loan to own? I like
Yeah.
that. So that's the highlight of the call here for me. So if people want to connect with you, they want to find out more, they want to lend to you, they want to know more about transaction coordinating, they want to know what it is that you do. How do they find you? What should they do?
Yeah, you could reach out to me by my cell number, shoot me a text or call 440-581-2958. Also, Rinks Rentals on YouTube or Instagram. And you can find me there. I have, a YouTube channel and I'm pretty active on Instagram.
Awesome, awesome. Well, I really appreciate you stopping by.
Yeah, thank you.
No problem. Until next time, guys, we'll catch you on the next episode.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.